If you want to know where the gold price is going, just look at the money supply. If it increases, it's going to take more dollars to buy an ounce of gold. Just like it takes more dollars to buy a cup of coffee or a college education or, lawn care or whatever. Anything of value is going to cost more money. So debt is the same thing. It's what leads to the monetary expansion. So if debt's going up, gold's going to go up. There's no brainer in the history of no brainers.
So from a bull market perspective, the first one you mentioned lasted about a decade.
Yep.
And the second one that you mentioned lasted a little bit more than a decade. Now, of course, nothing went up in a straight line, but if you look at it, that's about the length of time.
Yep.
Are you, and you're saying that this is you believe that this is the third big gold and silver bull market since we were taken off the gold standard on August 15th, 1971. Do you think, or do you see this one also lasting about a decade? And if so, when do you think it began?
Yeah, I think this one actually may last a little bit longer, just because I think there was, again, meddling at the very start, right, with the pandemic, et cetera. I want to say it was like when we broke out, and I don't have the number in my mind, I should get it in my mind, when we broke out from 1,500. Gold. I think that's really the first breakout. That's when this thing started. And in the middle, we had this thing called the pandemic with all sorts of government meddling. So I think that may have kind of put things on hold. But starting from then, you'd think to 2025, but then for the meddling, maybe another 5-6 years. I think we've got till probably 2030 with this bull market. Duration wise, price wise, I'm still looking for 2 to 3 times the previous high. For this bull market. So that I'm looking at a number of 3980, or I'm sorry, 3,800 to 5,700 gold. That's 2 to 3 times 1921, which is where we were in September 2011.
So tomorrow is election day, and the U.S. is going to go to the polls. They're going to elect the next president of the U.S. The U.S. has been running $2+ trillion fiscal deficits for the last few years. And the CBO is predicting more of the same, and as far as the eye can see, indefinitely. And all of that is without a recession. Mm-hmm. Deutsche Bank recently put out a chart showing that the gold price and the debt is moving in a near 1-to-1 correlation. So with debt likely to continue, or extremely likely to continue to explode regardless of whom is elected president, do you expect this gold to U.S. debt correlation to hold strong and the gold price to increase faster as debt expansion escalates?
Yeah, I mean, the bottom line is as debt increases, like I said, there's really only one option. We're not going to have full-scale default. There's only one option. That's to increase the money supply. And I've been tracking for years the gold price versus the money supply. If you want to know where the gold price is going, just look at the money supply. If it increases, it's going to take more dollars to buy an ounce of gold. Just like it takes more dollars to buy a cup of coffee or a college education or, lawn care or whatever. Anything of value is going to cost more money. So debt is the same thing. It's what leads to the monetary expansion. So if debt's going up, gold's going to go up. There's no two ways about it. I think this is the biggest no-brainer in the history of no-brainers.
So, Rich, you mentioned the trend that you're starting to see a shift in the purchasing. Are you seeing anything else out there that's of significance in terms of buying activity?
Yeah, so like I said, I've been to a couple conferences here lately. The energy has been unbelievable. So I went to one conference. I'm not going to name where I was, but we always try to capture. We deliver a message. We hope people it resonates with people. They like us and they want to keep in touch and do business with us. We sign them up for our free newsletters. I've been doing this 29 years. Usually it's somewhere around 25 to 40% in a really good conference that we would capture names. 93%.
Wow.
Unheard of. So yeah, there's more interest. People are waking up to gold. That's another indicator. The buying questions, right? So, sometimes people just come up and ask basic questions, and they'll, well, what about this? What about this? You can tell they're nonplussed. They're kind of just asking some questions because they don't know, but they have
almost like window shopping.
Yeah, but they have no intention of buying gold. You can see it. Those are not the questions I'm hearing. we everything is like when I buy $150,000 worth of gold, should I do it all at once or should I do it in tranches? Those are the questions. Not if I maybe should I consider gold when I buy. How should I do it? That's different. Had a workshop at the last conference I was at. Started about 5-10 minutes early. 45-minute presentation. I stopped about 10 minutes before the end of it. So, 40, 35, 40 minutes of talking. And then I said, let's have some questions. Left it up for 10 minutes. We were the last session of the day. 10 minutes passed, 5, 6, 7 hands still going up every time I answer somebody's question. So I said, listen, if they're not going to kick us out of here, I'll stay here till you're done. I'll stay here all night answering your questions about gold. And 45 minutes later, finally exhausted all the questions of a full room. Again, an indicator. It's not, we're not in, all out crazy bull market behavior. This is not irrational exuberance, but there is genuine interest, and people are looking for alternatives. There's no question in my mind.
Well, that is fantastic. And maybe we are on the doorstep of a shift in the Western investor here based on, these types of indicators. So we've talked about the general public not being desperate yet to own gold and silver, maybe starting to get more interested, maybe taking a few steps in that direction, but not yet fully committing. What do you think gets them to a point of desperation where they actually take these action steps in mass? And if the mass of the Western investors actually do get desperate and they actually start pulling the trigger here in mass, what does that look like? What does that market look like?
I'm not going to get much sleep, I'll tell you that. No, I think a couple things. I said one, my biggest fear could be that jingle mail with commercial real estate. So if we have some sort of crisis that triggers another banking crisis, when Silicon Valley and Republic Bank failed, I would tell you we got a lot of calls. That was a surge in business for sure. People were worried. Oh my gosh, I should have already bought gold. Can I buy some now? But it wasn't just from clients. It was from asset managers, financial planners who said, listen, my clients are asking me for a source for physical gold, something I can't solve with an ETF where you actually don't hold the gold, right? They want physical gold. Can you help us? We did a lot of business with financial planners and still do to this day because of that concern. So a banking crisis could trigger it. I think a pullback in the stock market can absolutely trigger it. I mean, that's where people are focused right now. They're still making money until they stop making money. They're going to be kind of sort of in a way okay. But once they start seeing the casino taking their money, not giving it to them, then I think they're going to panic a little bit and for sure move to gold. That's one of the first stops. For half the nation, we'll probably have tomorrow a reason, or the day after a reason for them to run to gold, because they'll be scared to death about the other guy or the other gal getting in. That could trigger some moves.
So let's say we get a trigger event, whether it be the stock market decline or whether it be banking or whether it be just a political choice resulting in volatility and maybe some chaos, whatever it is.
Well, that's one more thing. Further escalation of geopolitical tensions.
Right.
Make
right.
No mistake, shooting wars trigger movement to gold too. So
yeah. So there's many potential triggers here, and there's probably more that we haven't spoken about. But what does that market look like? What does it look like when the mass public, the mass investing public shifts from, I don't want gold at 27.50 to all of a sudden I want gold. I need it right now.
Yeah, well, that does happen. I will tell you, the last time I saw something of that magnitude was summer 2015. I don't know if you remember, but Brexit was going on, right? Or I'm sorry, Grexit, I want to say, was going on. So the Greece issue of leaving the European Union was ongoing at about the same time. This is August 2015, where the Chinese stock market fell precipitously, and that triggered, like a day or two later, the U.S. stock market precipitously falling, and that had people running to gold and silver. I remember one of the newsletter writers was recommending junk silver, so pre-1965 U.S. quarters, dimes, and half dollars, 90% silver content. They were recommending that. The only problem was everything that was in the marketplace was bought up. You have to rely on secondary markets, right? Because they're not making any more 1964 quarters. So there was nothing available. We were giving clients terms of, listen, we're going to charge you a 45 to 50% premium. I need a wire transfer within a day or two. And I'm not sure when I'm going to get it to you. Hopefully within about 6 to 8 weeks, but I'll let you know when I know. So those were
And
the terms.
they were still moving
They're like,
forward.
I don't care. Whoever said to buy it, I'm buying it now. Okay, so that's what that could look like. The last bull market, we're not a huge firm. We have like 6, 7 sales reps. I was getting 200 incoming calls an hour. That's what that market can look like. I caution people, it's not the end of the world. Metal is still available. And even if you buy it at a slightly elevated price, in the long term, unless Congress stops overspending, which nobody has a desire to do, et cetera, you're going to catch up to that price and surpass it anyway. So who cares? As long as you take care of that little piece of your portfolio that's a store of value, good for you. So the bottom line is, it'll get quite busy. There are options in that environment when, fabricated coins and bars, when the mints can't keep up with demand, because it does happen from time to time. There are options like, the Perth Mint Certificate you mentioned, where, that premium, despite what's going on in the world, hasn't gone up in 28 years, right? So you don't have to succumb to high premiums. There are always options. Reach out to a dealer, someone like ourselves, and we will guide you as to what is the most cost-effective option in that environment. That's our job.
So, Rich, how does gold and silver positively impact an investment portfolio and reduce volatility along the way?
Yeah. How that happens, I don't know. But I do know that there have been a number of studies. World Gold Council, for one, did a study. They looked at all sorts of different portfolios denominated in a variety of currencies, pounds, yen, euro, dollars, what have you, with different stock bond mixes, right? And with varying allocations of gold. And what they found was there was a sweet spot. Right. So having more is not good. Having too little is not good. But right in the middle, they found that regardless of the currency, regardless of the stock bond mix, if you had about 8 to 12% of gold in a portfolio, it actually increased overall portfolio performance and decreased portfolio risk.
Yeah, and I think 71% of advisors hold 0 to 1%. So we have a long way to go before.
There's a lot of upside in my market. There's no question. But I use 10% because the math is easy. So, but it's right in the middle of 8 to 12.
So with gold at all-time highs nominally, do you foresee new investors of physical coming into the space at some point here in the near future or whatnot as gold continues to rise and saying, gold looks expensive, but silver, that looks really cheap. And then they turn to purchasing silver as the alternative to the higher cost gold because they think they're going to get more bang for their buck.
It's a natural progression of things. We've seen this in the 2 previous bull markets. Gold is your leader. It will start moving down in a bear market from a bull market first, set the trend. Silver will follow and then outpace it to the downside. Coming back up, same thing. And for the reason you just mentioned, gold will set the trend, silver lags, and then it will follow, and then it will outpace gold. We're starting to see that behavior a little bit in silver this year. It's a slight performance of gold this year. I want to say like 35 to 33 or 36 to 34, something like that percent so far this year. So silver's starting to catch up. I am not a chartist. I know enough to be dangerous. I understand that a cup and handle is an incredibly bullish formation. And if you want to have some fun, go take a look at a 45-year silver chart. Okay. This is a 45-year cup and handle that has now broken out. Again, not a chartist. Good friend of mine is. He said, given the previous highs and lows, et cetera, of that form this cup and handle, that the upside potential is about $90 an ounce, and I think that's probably conservative. I certainly think we're going to get well above the 50 of the previous two bull markets.
Well, let's stay on this topic here. In the previous bull market from the early 2000s, silver saw gains of about 1,000% over its previous lows when it established the current all-time high of 50 in April of 2011. In your analysis, will this current precious metals bull market, well, you've already stated that it's going to be lengthy, and in fact, you even think it's going to be longer than the early 2000s, but are you expecting a comparable percentage rise in the price of silver this time around, or is that level just too improbable?
No, I based on this cup and handle, I think somewhere around $100 an ounce makes sense. Now, a lot of folks were calling for that number last bull market, right? Because we hit 50 in 1980. In January 1980, we were at $50 an ounce, up from, whatever, $1, $2 an ounce. And, you thought that, okay, it's got to go further now. For me, I had a problem with that reasoning because I thought that a lot of that $50 price in 1980 was driven by the actions of the Hunt brothers in concert with the Arab sheiks, trying to maybe not corner, but absolutely make money in the silver market through their efforts of buying into the futures, taking delivery, etc. So the bottom line is, I never thought 50 or beyond 50 was reasonable last time. I think last time 50 happened because that's what the market dictated. I think now higher than 50 is probably where we're going. There were no Hunt brothers or Arab sheiks involved in 2011.
Someone I recently spoke with, he said that, when silver peaks, you're seeing a lot of selling activity of things like, silverware and things like that. People see a number, they like the number, and that's when, the thing peaks. Well, he said this time, because of inflation, who's going to sell at $50? $50 is just not enough anymore. And even $100. He says 100 is the new floor in order for us to reach a peak where people are going to sell. But in his opinion, he's saying it's likely to be higher, something that's going to, shake the tree enough for the leaves to fall off. It's going to take at least 100, if not more.
Yeah, it's what we call in the industry tired liquidation. Well, that's not tired liquidation. That's hitting your point. Selling before it goes up and saying, enough's enough. I'm tired of holding this. That's tired liquidation. You're right. People have their number. And some people, that number is 50. Okay. They're going to see that and they say, I'm getting rid of it. It hit there twice before. It didn't go higher. I'm going to get rid of it here before it goes down again. Right. You'll get that kind of philosophy or reasoning out there. But I'm in line with your friend. I think $100 is probably the number. I think that makes sense. Given the amount of monetary expansion. Let look at the chart for monetary expansion. I mean, it had gone up, and then all of a sudden just hyperbolic during the pandemic. It's going to show itself. We're going to feel that.
So, Rich, despite all that we've spoken about in this time together, that's happening in the economy and the markets and the money supply and everything else, the Western investor, like we've said, still hasn't shown up to the gold and silver party. The rally's been primarily fueled by central banks, the Asian, Indian, and Middle Eastern markets, et cetera. When the Western investor finally shows up in mass, it's going to be obvious, I would think. I mean, we're going to see parabolic spikes. And at that point, we're probably going to be hearing our Uber driver telling us it's time to buy gold. Is that in fact the time?
Yeah.
Is that in fact the time to sell? Is that the signpost letting us know we're at the top?
So I have a number of indicators that I look at, and not any one of them signals the top to me, right? So first off is sentiment. Is your Uber driver giving you silver tips? That's not happening. I've taken a lot of Ubers lately. Not once has silver gone up in conversation. Another thing to look at is peace breaking out all over the globe. No, not happening. Domestically, do we have social rest or unrest? I think it's safe to say we're in an unrestful period. Interest rates. I already told you, I got to get to high single or low double digits before that would dissuade people from owning gold. We're going the other direction. We didn't even get halfway there. Um, Another thing I look at is the gold silver ratio, right? Because of that phenomenon where gold goes, silver outpaces. As they both move up in a bull market, that the number of ounces of silver it takes to buy an ounce of gold will necessarily come down, even though both prices are going higher. 80 signals the buying point, where you're done with the bear market, you're ready to turn bull. 80 to 1 is usually where you do that. We've been there for like 2 years. Okay. We got as high as 127 at one point, for God's sakes. I think that is an all time record. But we want to get that down to about 35 to 50 before I start looking for the exits. I already told you the duration. We tend to agree on that. I think it's going to be a little longer. Look at the price. I'm looking for 3,800 to 5,700. If we start seeing 1, 2, 3 of these things start coming together like clouds, like, okay, it's going to rain. There's not even a single one of those factors that are firing right now. I don't really care where the exit signs are at this point.
Makes sense. So, okay. So what will ultimately stop this precious metals bull run? I mean, we've got a long way to go. We're still early in the process. Maybe we're in the third, fourth inning. We got till the end of the decade. It looks like, before this thing really peaks out. In your analysis, what factor or factors ultimately stop this precious metals bull run?
Yeah, it's the one thing I didn't mention in terms of the gathering clouds, and that's the strength of the U.S. dollar. The dollar, relatively, you can argue, is strong right now against other major currencies, but that's just because they're all weak. The dollar is not strong. On the U.S. dollar index, it was at 116, a year and a half ago, and now it's moving up to 104 or 105 or what have you, wherever it is right now. I think it's inherently weak. All currencies are inherently weak due to mismanagement. And I think we need to see a stronger dollar before you see people turn away from gold. And they're not even in gold yet. They're just starting to find it. But before we can turn away from it, I think you need to see a stronger dollar. And that relies on a lot of different things. It relies on some belief in institutions, in banks, in governments here in our country. It relies on the belief that we are on the right track and getting stronger. I just don't think people feel that is the key.
Maybe balancing the budget, paying down the debt, and a few other
things like this would certainly help.
Yeah.
There's no question about it. In the meantime, we're going the other direction, and I think that's really what's going to take. I think if you look at a stronger dollar, that's a pretty good indicator that gold's going to take it to the sidelines for a little bit.
Well, these are all really encouraging things for the gold bull. This has been a wonderful conversation. Before we wrap up here, and I ask Rich our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Rich as much as I have. Please let him know by hitting the like and subscribe button and leaving a comment below the video. Now time for our Golden Nugget segment. Rich, let's discuss gold and its traditional correlations. You started to touch on it just a moment ago. Gold used to have these high correlations to things like the dollar and to interest rates. We've watched those correlations literally melt away here in 2024 as both the dollar and gold went higher at the same time. Why do you suppose that gold is no longer responding predictably to these old correlations and it's now acting independently on its own signals?
That's a good question. Boy, I wish I had time to prepare for that one. I don't know. I just think it's time. I think there is a distrust in institutions right now. I think there's a distrust in banks. I think people are skeptical about what they're being fed right now in terms of information. And they're starting to come around that, if you just dig a little bit below the surface, um, things don't quite seem the way they're being reported to me. And when you start doubting, when you start having concerns of this nature, I think gold is a natural place to turn to. I think, regardless of what happens in the stock market, what happens in the election, this is all just kind of noise in the background for gold. Uh, Gold's argument, Gold's premise, if you will, is very strong, and I think becoming more obvious to people right now. And they're turning that direction. It's in the headlines. We see what the BRICS are doing on a larger scale, right? They're talking about a gold backed currency. I've been espousing for years that our people become their own central banks, right?
Mm-hmm.
Take matters into your own hands for fiscal responsibility. If Congress won't do it, you do it yourself. That type of thing. I think it's becoming more and more in the forefront. Uh, Even if they don't understand it, they know something is brewing, and gold might be the answer.
Just to add to what you just said, traditional media has had a stranglehold over the messaging, the narrative, and what we've been fed through the years. And even over the previous election cycle, things were such that there's indications that there was collusion with social media outlets, and they were controlling what we could see, what we can't. They were fact checking and doing all these things. But since X was purchased by Elon and TikTok's out there, you just feel a different vibe this time around, where it seems like we're being given the opportunity to look at things with our own eyes and make our own assessments without that being taken down and covered up and changed this time around. And so the veil is being lifted, it feels like, little by little. And I think that correlates with what you just spoke about for gold.
No, I think you're right on target. It's interesting that for so long we did not critically think. Right, we left it up to others to tell us what we should be thinking, and I think more and more people are listening to all sources, whether they're affiliated with that source or it's the complete opposite end of the spectrum. I think more and more people are listening to both sides of the story. It may not change their minds, but they're distilling it more themselves as opposed to letting someone distill it for them. And I think that's a move in the right direction.
And it's critical, for freedom. I mean, everybody needs to be able to hear what all the sides are saying so that they can make the best decision possible for them and their family. Well, Rich, thank you for coming on to the Metals and Miners podcast, for being so generous with your time, analysis, and ideas. It's been awesome to spend the time with you. Would you share with the viewers any important message you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Yeah, thanks for that. And I do have one message I do want to share. So the way to reach us is our website, assetstrategies.com. You can call us toll free, 800-831-0007. That's 10 better than James Bond, by the way. Or you can reach out via email to infoasi@assetstrategies.com. And by all means, send us your comments, send us your questions, subscribe to our free newsletters. It's our way of kind of keeping in touch and sharing our thoughts. The biggest thought I have is we have a burgeoning bull market right now. There's no two ways about it. I've seen a couple in my lifetime. I traded through the last one. I can tell you, the more popular gold gets, the more greedy people will get into this industry trying to fleece you, as opposed to taking care of you. And there's just a few things. I might offer this up, Gary, as a for anybody who watches this, if they want to just ask for it. We have a free special report, the 10 most common mistakes of first-time gold buyers. The number one is, when you're looking to buy gold, before you buy anything, ask the dealer if they will buy back when it's time for you to sell. If the answer is no, you should never, ever buy anything from them at all, because the only reason they won't buy back is because they're charging you too much on the way in. So that's one of the tips that we give in the special report. If you get readers just ask for it, we'll go ahead and send it to them. So just come in on ASI Info, ask for the free report, and we'll send that out to your readers. Happy to do it.
Well, that's fantastic. So I'm going to put all the information that you just gave up on the screen. It'll also be in the description area so folks can click through and get over to you seamlessly and easily. Guys, I've been following Rich. I actually met Rich down in Boca at the Rick Rule Symposium in July. And Rich and I hit it off. And I will tell you that man to man, he exudes the trust that he was just talking about. And so when you're buying physical gold and silver, you do want to have that kind of relationship. And Rich is a man of integrity. I can vouch for that from having met him personally over a 3-4 day period. We had numerous conversations and have had numerous conversations since. So if you're not following Rich and you're not following ASI, you need to follow him, especially since we're in the middle of or the beginning of this gold bull run. So anyway, Rich, I look forward to having you back on sometime soon. Thank you for being here with us. Everybody else, thank you for watching.
Thank you.
I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." This free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.